Hello everyone, today is Friday, August 20th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If it's your first time tuning in or catching one of these videos, welcome. It is great to have you here. Thanks for joining us. Here's how we break up our analysis. We split things up into two parts. In part one, we look at everything that went on this week in markets. So those are things like correlations, sector performance, market internals, volatility, credit markets, all the good stuff. We dive into it and pick apart everything that stands out, looks different or interesting. And then in part two, we jump into the charts. We look at those longer term trends. We try and make sense of everything at a higher level and how to best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into some of the takeaways from this week. It was a volatile week out there for markets. We saw lots of selling pressure really at the first three quarters of the week, frankly. We saw a good amount of selling pressure out there, and specifically underneath the market cap weighted hood of the indices. So when you went into the average stock, we saw lots of kind of pressure out there and downtrends emerging and breaking of support. But by the end of the week, we did see an aggressive rebound. I'm speaking mostly to Friday's action. We closed the week on a bit of a rebound high recovery note where we saw markets up about 1% on Friday and closing at the highs of the day. So it was a relatively constructive way to finish a tough week, but there are still signs of cracks and damage that we're going to talk about in this video. We saw the US dollar pushing to new highs this week. So new year-to-date highs are pretty close to year-to-date highs in the dollar. We're going to talk about that. And we're also seeing oil sustain a bit of a downside action here. We are getting more pressure. It was down a few percent this week. We're going to dive into that a little bit later. First things first, let's take a look at performance on the week. So that's the right-hand column here. You can see that we were red across the board, and we had, the Dow Jones and the Russell 2000 as the standout underperformers, mostly the Russell, down 2.6% this week. The Nasdaq was the best in the lead here on a relative basis. It was still down marginally on the week, 0.3%, and world stocks were under pressure as well here, down almost 3%, so very much in line with the Russell 2000 there. Take a look at the 1 month numbers for the stock market now. You can see we're moving more into flat to negative territory here over a 1 month look back window. If we take a look at market internals, we definitely have some changes of character here surfacing. Now, the first row is the NYSE 52-week highs minus lows, and take a look at how much we have dried up here. This has been a rip-roaring uptrend for most of this year. These numbers have been printing double and triple digits daily, and we're starting to now see some cracks really start to emerge here, and this is something I pay very close attention to. Now, Friday's numbers, this might not be as bearish. Again, I record these videos right after the close, so I'm using unsettled numbers on Friday. I am always sort of estimating this right here. So this could be a little bit higher. Maybe the week ended flat or positive, but regardless, definitely a change of character this week. We also saw some steeply negative levels here on the cumulative AD line. Basically, again, if it wasn't for Friday, it was the only saving grace here. It was down 4,000 on the week. So that was pretty substantial. The, I guess, slight positive here is we've gotten a little bit of a reset on the percentage of S&P 500 stocks over 20 SMA. So that's back down around 42%. I mean, it's always nice to see short-term resets of that metric, just to wash out the froth and the like. So we did get that. If you want to take a glass half full approach there. If we take a look at this chart, though, this is the cumulative 52-week highs minus lows over the past 30 days, and notice we do have this downtrend emerging here. It is short, it is shallow, and it is marginal at this point, But this is what I'll be paying close attention to. Is I don't like when this starts to trend downward here, and especially if it starts trending down in any type of steep fashion. That's what gets me concerned. That's definitely what will change my narrative and outlook on this market to a more pessimistic, bearish sort of viewpoint, which is something that we haven't quite seen in just all of this year. And it's funny because, generally speaking, when I post the videos, there tends to either be emails, comments, or the like that kind of come through saying, how can you be bullish on this market still? And, the response always kind of makes me chuckle because I basically, if for anybody that's watched these videos, I don't necessarily take a strong viewpoint. I'm never going out on a limb and doing any type of predictions. I'm simply looking at what the market is offering up and what the data is basically suggesting. And this is where now the data is telling me and suggesting to me that it is time to take notice and pause and be a bit more cautious. So that's exactly what I'm doing. Taking note of it. It's not the end of the world yet. It's one sort of piece of the full sort of analysis puzzle, but it is something I'll be paying close attention to. Now, if we look at sector performance on the week, you can see it was kind of split here. We saw utilities, healthcare, real estate. Utilities and healthcare were up almost 2%, so pretty sharply there. A little bit less so on the third, fourth, and fifth slot, and then we saw half of the sectors here in the red. Energy just totally, pulling away in a bad sense from the market here, down 7%, huge move for XLE. So definitely feeling the pain there. You can see the 1 month numbers now going negative for energy. If we take a look at market correlations, so the sort of biggest standout here, these are 10-day correlations. Again, I always want to remind everyone these are noisy, these are short term, but this does tell us what sort of moving together, what narratives might be kind of locking hold in this market. And the, kind of most substantial correlation here in inverse correlation is the dollar to what the markets are doing. So the dollar moving inverse in the direction of what the S&P, the Nasdaq, the Russell, ACWX is doing. So that is definitely kind of the clearest, or, something I'm paying attention to as this has tightened up a little bit. We also see some interesting correlations going on here with crude oil and the Russell 2000, maybe, the energy stock complex here, maybe more concentrated in the Russell 2000 and its underperformance. So that I think as well is sort of notable. Volatility here is certainly higher across the curve, so we definitely elevated across the term structure here. I mean, it's a lot better than what it was intra-week because we were, at a VIX that was all the way up around 24, I believe, 23, 24 earlier this week. So we definitely saw a bit of a roller coaster here in VIX and fear and what people were willing to pay for protection. So closing at 18, again, is certainly much higher than last week, but a win, all things considered. And we did kind of close this gap just a little bit. Again, we talked about the steepness between the front month and the 3 month, and you can see that changed a little bit here. We got a little less steep on after this week's worth of trading. If we look at interest rates and credit, so we saw yields down across the board. That means bond markets were enjoying this week. They were a bit of a safety haven or working higher. And we also saw credit markets really not actually throwing up too much of a concern this week, which was constructive to see. And that's something that I think ultimately is kind of a good thing. I mean, it was net a little bit negative here. I mean, if you're looking at these in aggregate, but generally speaking, not too big of a concern. If we're taking a look at the dollar index, again, you can see that was up 1% this week. That was pretty sharp, pushing to, again, I believe it was year-to-date highs. If not, it's pretty darn close. We saw gold staying pretty, sideways and resilient in the face of this rising dollar. Silver was not in that same camp. Silver is still seeing some selling pressure. Take a look at its 1 month return there, down almost 9%. Bitcoin was up this week, 3.36%. Looks like it's trying to break out here going into the weekend. Agriculture down, crude oil down very sharply here, 8.5%. Natural gas pretty sideways as well. So if we take a look at the report card, it has been a long time since we've seen X's across the board. There was nothing that was saving this market here over the course of this week. Remember, this report card is for this week's action. And even despite the rebound on Friday, we still got X's across the board here. So this is going to be interesting to pay attention to and see how this, continues into next week and basically the end of August. Now, if we take a look at trading systems here, so these are the two trading systems that we run here that I allocate to in or at the trade risk. And we have our Merlin trading system up top. So it is still invested here in this market. It is going to be watching very closely again how all this sort of shakes out. Maybe we'll finally start to see some new, different and interesting behavior here. But this has been stubbornly long the market all year. It's been very right all year, and it's been rewarded for being long the market as it has been. But now we'll see if it's overstays its welcome a little bit, and that'll be interesting to see how this shakes out. Still invested. Lamerick here in the short term also tilted long in this market. Again, this is much more agile and willing to adapt. I do think we have some exits and some different things going on for Monday, but right now that's the current spread here on our two trading systems, intermediate term, short term at the bottom, and that's how we're positioned. So with that, we'll be back in just a moment here with part two. One of the most common questions I get from traders after listening to one of our market analysis videos goes a little something like this. Evan, there's so much information. There's so much to consider. Should I be bullish or should I be bearish? And I respect the question because there is always a lot of information to think about, and it's almost always conflicting. That's why these videos are designed to help you objectively frame out markets, but it is on you to execute and pull the trigger based on all the information that we talk about. Now, if you're interested in the stocks and ETFs that I am personally allocating to, then it is our Merlin and Lamerick trading systems. Merlin was built to invest aggressively during healthy market environments and then step aside and get defensive to avoid large corrections. It patiently holds trades for about a month at a time, and it primarily trades growth stocks. You can have a full-time job and easily execute on the signals after the market closes. Our Lamerick trading system is a much shorter term tactical strategy. It holds trades on average for just 4 days, and it trades long and short, which allows it to perform well in more difficult, choppy, and volatile markets, and still no intraday screen watching is required. If you want to learn more about these trading systems, head to thetraderisk.com/systems. There's also a link appearing in the top right hand of your screen. When you sign up for one of our trading systems, you'll be given a login to our website. You can access our nightly trade reports. You'll be put on an email list so you can easily learn more about the trading systems and follow along easily after the market closes. We also have 14-day free trials available. Head to thetraderisk.com/systems. And now let's get back to the show. Let's jump into it here with our technical analysis on what's going on major markets, sectors, assets, and all the good stuff. Now, we always like to start off with a high-level understanding of trends and momentum. That is the best place to start before we start getting into any of the specifics and looking at candlesticks and short-term patterns. We just like to know from a high level price, volume, what's going on in markets. And so we have our custom smart trend filter applied to the S&P in the top left, Qs in the top right, Russell in the bottom left, ACWX, which is international stocks, in the bottom right. And this is a weekly time frame we're looking at. And so when we look here at our measure of trend and what volume has to say, we can see in the S&P 500, there's absolutely no change here in our outlook. We are still in a broad-based uptrend. Life looks good here for the bulls at this time as price is still hovering near its highs, trend below current levels. Nasdaq, same exact thing. Nasdaq 100, you can see still getting green dots printed. That tells us that that's a bullish buy signal, that is trend strength, and it basically says that path of least resistance is higher. Now, the Russell is interesting here, and this is where, again, we really like this indicator, is because the jury is still out on how this range is going to resolve itself. Notice how choppy the Russell 2000 continues to be, and in fact, it was down pretty sharply this week, and it is currently sitting below our trend filter, so it's in danger of producing a sell signal. It's in danger of rolling over, but what our indicator is looking at here is the fact that it just hasn't quite made up its mind yet. And that's why you're still seeing yellow dots printed here, is because the market is still in this state of indecision, and we are kind of waiting for some clarity here, and that continues to be the case. Again, we got a bit of a save on Friday in terms of this market. Let's see how this steps up next week. Buyers have been supporting the low end of the Russell. We'll see if they continue to do that and can bounce and find follow through next week. And international stocks, so we got a print on the buy signal last week, and we got looking like it was going to be a trend continuation higher, but didn't last long. We're back to a yellow there, and we're basically now in wait and see mode as well in the international market. Now, let's take a look here at the daily chart on all of these markets, because that is what's going to start to be a little more noisy and give us some different signals. So if we look here at the SPY, notice that even with the selling pressure that we saw throughout the beginning of this week, we still actually never got a sell signal produced here on our trend model. Now, we still are, you know, in a yellow kind of transition state, or what I usually like to say is a pay close attention state. And that's definitely what we're going to be looking at here when we throw on some of the shorter term candlestick charts. We're going to look at how this is playing itself out. But for now, it is still managing to kind of hang on here. And we always like to say we give the benefit of the doubt to the prior signal, which in this case is up. Now, the Nasdaq, you can see a lot more yellow creeping in here, but notice it too, despite the turbulence and selling pressure from this week, never produced a sell signal. It never totally rolled over here. So we're going to give the benefit of the doubt to the buyers here still on the fact that they were the prior signal. And if we look in the bottom left here, we've got the Russell 2000. Now, this is on a sell signal on the daily chart. So this is where you're getting weekly signals still transition. Daily signal has been flip-flopping, so you're getting a little bit more noise down here on this daily time frame. And again, if this stays red for too much longer, then the weekly chart is bound to sort of flip over down to red as well. So we got to keep a close eye on this, but this is definitely, you know, the underperformer here. We're going to talk more about that in a second. And then international stocks, again, you can see printing a sell signal here this week as well. On Wednesday of this week, we transition lower, and that's currently the outlook here for ACWX. We know that the longer term model is still in transition. Now, let us dig a little bit deeper here. Let's take a look at the candlestick chart here on the S&P 500. Let's take a little bit closer at the price action. So essentially, you know, we came into the 16th was the high, which was Monday of this week. So when we came in on Monday, we saw a little bit of volatility. Even on Monday, we traded down to, you know, about 44.39 here in the S&P index, and we closed back up at highs. But notice that's what started this pullback of about 2.5%. Now, it's kind of laughable to even, you know, address a 2.5% move as a pullback, but in 2021, that is a meaningful pullback. That is a meaningful amount for the S&P 500. I know it's crazy to say, and like we talked about in part one, a lot of the names under the hood were being dragged down at sold off at a much more aggressive pace. So the average stock was down a lot more than just 2%, but the S&P 500, which let's just jump to it right now, and we talked about in last video, is being held up by the behemoths like Apple, which is just having a really tough time trying to crack. Or we can look at Microsoft as well, which clearly is doing its own thing of just ripping higher. And this is what's making the index level so difficult to pull back, is because these 1.5 trillion plus companies are holding the market up. You can look at Google as well, which is hanging up here. We can go right down the list. But the point is, we had this 2.5% pullback in the S&P 500, few days down, and then we had this outside reversal day here on Thursday, and then we got follow through higher on Friday. So it was encouraging to see the follow through action on Friday. If we take a look at levels here in the S&P 500, you know, we're basically going to be staring at this right in here, which is this 43.86. Now, again, we sort of closed and cut underneath it, but this is definitely the most important level in my eyes in the short term and short to intermediate term, frankly. We topped out here back in July. We found support here in late July, early August, and then we just rebounded off of this level this week on Thursday. So this to me is a good line in the sand here to use going forward here. If you want to stay optimistic, if we want to keep the momentum in this market, 43.80, let's call it, is the zone here that we want to be staying above on a closing basis. That's definitely what I would be paying attention to. Otherwise, we could just be developing a new trading range in here, from the highs up to this level here. So it just really kind of could be kind of noisy in here for the next few days as the market figures out what it wants to do. But to me, 43.80, that's the big level. You could kind of come back here. You could draw some trend lines from, the lows down here and start to, form some type of channel. I think that can make sense as well. I'm not going to draw it as perfect as you may. So again, feel free to do that. But you've also got this kind of confluence that would come in here, really basically both pointing to around 43.80 or so as the level to hold. So for me, that's what I'm paying attention to. If we look at some other markets like the Nasdaq, this has got slight different kind of change of character to it, or a slight different look. I mean, we have the highs here around 15.2, which we're going to want to pay close attention to. And, in terms of strategy, which I don't like to get into strategy all that often, but another way to very simply think about markets like this, when things get noisy, when things get choppy like this, if you're a shorter term trader, you can sort of opt out from the headaches of this area and simply, say, I want to see this market prove itself over prior resistance. I want to see this market get over, 51, 175, or, whatever the specific is here on the high. And that is when I will start to pay attention again. And that's a very reasonable way to just sort of, dismiss everything that could be choppy and messy in here and, just wait for more clearer sort of signals. Now, if you're not up for that and we're looking at downside levels, then, I mean, we still have sort of this area right in, whoops, sorry about that. We still have this area right in here, which I would be paying attention to. And let's see if I can get this to, let's go this way. So if I want to pay attention to the recent lows here from Thursday, and it was about this little volatility spurt back here from July 27th, this 14.8 level is where I'd be paying close attention to. And that could be a reasonable spot to measure risk against going forward. I mean, we don't really have a ton beyond that. I mean, we have basically, this here, which we should be paying attention to if we start to break, is about this 14.5 area. But, beyond that, there's not a whole lot of prior levels down here until you come all the way back to the April highs around 14 and 14 flat, basically. So I'd be paying attention to Thursday's pivot low. That's going to be an important level to hold. If we start cutting through there, then, we've got to move all the way back down to the July lows here. So as it stands, if we were to get all the way back to the July lows, that's about a 4.5% move, which again, in the grand scheme of things, is pretty shallow, but we know we're dealing with sort of unique times in these markets, basically, with some of these behemoths that just won't crack down. So Nasdaq, that's what we're looking at here. Could be pretty choppy, but for now it is, surviving, and this rebound on Friday again is constructive from the fact that we saved ourselves and we didn't go into the weekend, closing at the lows. Now, the Russell 2000 is a lot more interesting here, and the weakness is definitely persisting. So this range that we've talked about all year now is still in play, and you can see we're once again testing the lower end of this range. And we published an idea on TradingView and on our Twitter stream here basically yesterday saying, okay, here we go again. Russell 2000 down 6 days in a row. And, by the way, we were below the lower Bollinger Band here as well. And this was obviously in regards to yesterday's session. So down 6 days in a row, back to the low end of the range, below the Bollinger Band. this is definitely where you'd want to see the buyers step back up if they are going to support this bottom end of the range and keep this consolidation going. So far, that's exactly what we saw. We saw the rebound here on Friday, and life goes on for this range on the Russell. This is definitely something we want to watch next week, though. If we, start making another attempt, or if we get heavy down here again and we start taking out 210 to the downside on a closing basis, that's going to be a problem, and that could, really be the spillover cascade effect for this market if the Russell is going to start losing itself here on a 10-month range. It's going to be very important to watch, so keep an eye on this 210 to, I never like using super precise levels. It's generally a zone that I'm always looking at, but, call it anything under 210 on a closing basis is going to be a bit of a concern here. So let's watch that next week and the potential kind of spillover effects on how that can affect other indices. Now, if we look at the VIX, for instance, this is a little more encouraging in the sense of the fact that we gave back all of this fear here. So we closed 26% off of the highs of the week. We got as high as 24 on Thursday's trading. So we really had some good fear that came into this market. Lots of people coming in to hedge, protect. And, when that generally is the case, when you get a lot of fear, when you get a lot of panic kind of set in a short amount of time, it's usually coincides with short-term bottoms, and sometimes those turn into intermediate-term bottoms. And so that is encouraging. The fact that the VIX really let off. The VIX trading at 18, though, I want to see that lower. Again, we always talk about it, but I'm a big fan of VIX around 16 or under. If we can keep a VIX under 16 while a market's near highs, that's a good sweet spot for trending market environments. And so up around 18.5. Let's see how, again, we follow up this week. Let's pay attention to that Russell. There's definitely a few things to keep an eye on here in terms of these different measurements. Now, if we look at TLT, it was up this week. We had a pretty good week. So you can see on the week here, it was up basically 1.35%. So that was pretty encouraging to see, and, back up in this trend here. So the thesis that we've had is, as long as TLT holds up here and we can see a nice rebound on TLT, we should expect tech stocks to outperform. And we did see that this week. On a relative basis, Nasdaq was clearly the outperformer. Didn't necessarily add a ton of gains, but it certainly outperformed on a relative basis. Now, we also have the US dollar here. So the Dixie was higher this week. You can see it did fade a bit and reverse on Friday, but this pushed to new year-to-date highs. I wasn't sure if we closed over this area, and we basically did. Certainly on a closing basis, these are new year-to-date highs for the dollar. So this uptrend in the dollar is continuing, and that hasn't changed yet. We've talked a lot about this, and we had a lot of calls that we thought it was kind of coming back up to this zone. We got a little bit spooked out here, I think, on this move lower, where we said, okay, maybe the dollar's not going to ultimately get back up here. But lo and behold, here it is, and it's kind of coming back up into this area here. So a lot of people got on the bearish dollar trade, and maybe in a longer term horizon, probably right, but at least in the short term, this trend just won't let up. Now, gold, not much to say about it this week. I mean, if it's certainly held in there, and especially in the face of a strong dollar, I guess you could consider this a win for the metal here. So GLD really tight. If you're a gold trader, I'd be watching this range. You're definitely going to see some fireworks one way or the other out of this tight consolidation. Silver absolutely was not as fortunate this week in terms of how it's acted. It is back to, the reason I wanted to talk about silver was just because if you look at this on a weekly time frame, you're kind of coming back now to this bigger, more broad zone on the consolidation that has been in place now since a year ago, July of 2020. Basically, this is where silver has been, and this could be a good buying opportunity here at the lows if you're a fan of silver and you think the prospects here look a little bit bright over the next 12, 18 months. This could be a decent spot to start to accumulate. So keep an eye on that one. Now, oil is clearly doing something a little bit different here. So we're starting to get finally a more, change of character here that is occurring. We've got a couple of things kind of going on here. We have the fact that, we are breaking below this area here which was the prior high here on February. So that to me is a little bit of a concern. And you could also sort of look at this, prior trend here. Obviously, it just depends on how you want to draw it, but clearly, we broke trend here throughout the course of the past couple of weeks. And now we're starting to break more structure here. So you could throw your fibs on, you could throw your retracements. The bottom line is crude oil is definitely in pullback mode right now, correction mode, and we'll see how far that goes. Clearly energy stocks reacting to it. If I'm looking here at prior levels, I would really, I would have preferred to see crude oil hold. Like Thursday's session to me was the great spot to buy, to see buyers show back up. But the fact that we gave it right back on Friday and then just closed the week at the lows, this to me suggests things are a little heavier, and this gets a little more dicey as it comes all the way back here. The big relevant level now is down around $40, which would give you crude oil at another, 8% correction. So not saying we have to get there, but certainly what I'd keep an open mind on about. Now, if we take a look, and actually let's just throw on Bollinger Bands here. So we are pretty extended below the lower Bollinger Bands. So again, keep that in mind. So, all right, let's take a look quickly at some sectors here. Technology. Technology was the sort of call last week in terms of the fact that we thought we would see some nice rotation here. So the fact that we are closing back up here at new highs, we have this nice range that we just put in, and now we're closing at highs. This looks pretty good here in terms of technology leading this next leg higher. I think it's going to happen. It's already starting to happen clearly this week, and this is something where I like the prospects going forward. Utilities clearly getting a nice benefit here and marching very quickly back to the all-time highs. Let's go to a weekly chart. So again, you can see utilities have been up now 3-4 weeks in a row, coming back up to the pre-coronavirus crash here in February, and life looks pretty good there for utilities. Biotech also holding up pretty well, all things considered. It looks still pretty constructive here. Remember, we did fail when we got up to these prior highs up here. So we poked our head up to around 175. We had this pretty quick fall right in there in 2 days. So that was definitely not ideal. But then we chopped around and we kind of held in there. And so if IBB can start to lift up here and ideally get back over 173, then that looks pretty good. Semiconductors, don't have a whole lot to say about semiconductors. In fact, I think this was supposed to be off this list to talk about. Nothing too exciting there. Financials I thought were interesting. Financials, again, kind of in the biotech space. It made new highs and then it pulled back pretty aggressively, but it's still kind of holding here. It's not giving up and looking horrible. So if it can stay over $37, then I do like financials. I think it can actually work here, and the pattern and the structure and the trend stays in play. If we start losing 37, I'm a bit more concerned. Now let's finalize with some crypto here. So Bitcoin breaking out to new highs going into the weekend. You can see Friday's highs, this nice range that we were looking at here. It got pretty choppy. Looked like we're about to lose some ground here. We had some favorable news. We had Coinbase putting it on the balance sheet, and not just Bitcoin, but kind of different assets across the board and collateral. So that's interesting to see. But Bitcoin now breaking out to new highs into the weekend. This trend looks good. Bollinger Bands on here, still expanding to the upside. Looks like we want to go knock on that 50K door, which wouldn't be surprised to see that this weekend. And Ethereum here didn't quite get the breakout going into the weekend, but it's pretty close, still range bound, and it's had a very, very strong run up from the lows, up about 100%, I believe, from the lows, 90%. So, a little bit of consolidation here makes sense. But, if this goes sideways and then it starts to break out, you got a nice target up here around prior highs, around 4,200. Not saying it has to get there at this time, but this, looks good from a price action perspective at this time. So that's it. That's what I have for this week's video. Again, hopefully this video is helpful. Hopefully, you find, these videos helpful just in general. And if you have any of your own thoughts or comments, that's what I was looking for. That's the sentence I was looking for, is getting your feedback, which I always like to look for and hear from. What are you watching this week? What's on your radar? Let me know. Leave a comment below in this video. I'd love to hear it. And as always, don't forget, you can subscribe to our channel on YouTube or follow us at The Trade Risk. Have yourself a great weekend now, and we'll see you back here next week.